Hello friends, so in today's video we are going to be looking at order blocks. So what are order blocks? They are simply a collection of orders in the market that big financial institutions or BFIs have accumulated before moving price to the upside or to the downside. Or you can also look at it as the last or previous candle before an aggressive move is made either upward or downward. Now, when you take a look at these candlesticks that I have sketched down here, by the way, these candlestick sketches don't have wicks, but then we can use it for this example. So when you take a good look, you can see that the first candle on the left, which is a buy candle, is followed after aggressive sell candles, right? So anytime we see something like this, we consider the first candlestick as an order block, in this case a bearish order block. And the same thing applies to the right side as well. You can see there is a sell candle, and then afterwards we have two huge aggressive buy candles, right? So then the first sell candle becomes an order block or a bullish order block, because after it comes a strong bullish movement. So let me just label this as bullish order block. And then we also call this one on the left hand side as the bearish order block, right? So we are naming the first or the previous candle before the aggressive movement. So we'll be looking at this on a sketch, and then later we'll move on to the chart itself so that you see how it executes. So this little diagram or sketch here shows you how order blocks actually play out on the real market, right? So you have the initial order block right here, and then you find price maybe moving upward, and then the moment it comes back to mitigate that zone, it will reverse back to the upside, right? So this is what we are going to see on the candlestick charts. So we'll be taking these examples on the gold charts, but then you can also find it in forex or crypto pairs as well. So right here you can find that this is our bearish order block, right? The one that comes before the little aggressive move to the downside. So what you do is you take a box tool and then you mark it up just like I've done, and you notice that the next time price came back into that zone, it went all the way down, completely crashing to the downside. Now the reason why banks do this or trade like this is because these institutions or hedge funds find those zones as good areas with untapped liquidity, right? So make more orders anytime price gets back into that zone. So we can spot another example here with this huge downward crash of the market, right? So you take the rectangle tool or the box tool, and then you mark up the previous candle before the drop started. So you just stretch it a bit, and then you see that the next time price moves up and mitigates that zone, it goes back down, right? So this is how to use order blocks to help you with your entries. Of course, you can't rely on only order blocks, so you need to have more other confluences like the fair value gaps and then the FIP levels as well. So those will be in the subsequent videos, and make sure to subscribe so that you do not miss those upcoming videos. Now let's move on to examples of bullish order blocks in the market. So you can see this was a strong bullish upward movement, and so you mark the previous candle before that, and then you just wait for price to come back to that zone. And as you can see, it does the same thing. It moves all the way to the upside, right? So the next time you get to the market, you can easily identify these order blocks on the chart, right? So you can see anytime there was an aggressive move, whether to the upside or to the downside. In this case, we are in a downtrend, right? So I'm going to try and mark these zones up. So then you pick the box to box the previous candle, you move it up, and you see that when price comes back to that zone, it crashes all the way down. So doing this as a scalp trade, you can see the number of pips you would have caught, right? This would have made up for a very good risk to reward ratio. So this is how to make good use of order blocks on the market. We find another example also at this region. So when you do the same thing, realize that the moment price comes back into that zone, it drops further downwards, right? So this is how to use order blocks to help you catch better entries on the market.